What's up, guys? It's August 8th, 2025. We're at a trading range day. A little more bullish price action, but bears were making money too. We had a sell off yesterday and then ended up closing above yesterday's high, so that's good for the bulls. I thought we'd be bouncing around this line today. We tapped it a couple times and then broke out end of the day. I didn't trade today. I did pretty good on the overnight session, so I just wanted to lock in those profits. If I play my cards right, maybe I get a payout next week. Who knows? Yeah, I caught these couple of trades last night on NASDAQ. Oh, guess NASDAQ is gone. There we go. That was a good one. I actually added a little bit. And then same thing, but I had to hit out with this one. Hit out like as we started to break out, and I had an order sitting here and it was getting late, so I just called it. When it kind of started to go away, I just called it, but it looks like the next trade would have worked out too. Yeah, there have been a couple of alright trades. But anyways, yeah, I did pretty good. I'm going to try and take next week a little bit slower just to lock in this payout again for like the 55th week in a row. I don't mean I've had 55 payouts. I mean, I've been trying to get paid out for like 55 weeks in a row. So the weekly chart closed pretty cool for the bulls. Almost a 2-bar reversal on the weekly chart. They couldn't get past last week's high, but really bad follow through for the bears with a bear bar closing this low, closing on its low like this, breaking through the EMA. Bears wanted this to be a breakout bar and continue to sell off, but yeah, ended up being just a pullback and the rally's continuing. Here's a zoomed in look at that pullback. Talked about in a couple breakdowns ago. Both sides want to leg two, put us in a little bit of a trading range. So here's the 50% pullback. I actually saw this and I'm being trapped. I had to hit out. Bears want to leg two down. I saw this on the options account. Leg one, pullback, leg two, looking for a test down here. Instead, they get trapped. And this bar gets its own second leg. Put it to the top of the spike. So the spike, the bull spike is from down here to up here. Leg one, pullback, leg two, that's met. And it even goes for 3 legs. So leg one, pullback, leg two. Hold on, leg one, pullback, leg two, pullback, leg three. I would have just traded the second leg up to here, but the leg kept going, and there was a pullback within this bar. So there's what am I trying to say? Leg one, pullback, leg two, and this rally also, the rally ends here, and the pullback started there, so it's all within that daily bar. And then that leg three, and this leg three hasn't broke this high yet, so bulls want to finish that, and bears want this just to be nothing more than a deep pullback, 3 pushes up, and a sell-off. We'll see what happens next week. Gap up, bar one, trading range bar with a bear body, so not the best situation for bulls after a breakout yesterday. But yesterday's breakout does get a leg two, with bar two being the pullback. So this is the breakout, and this is the first pullback inside. Excuse me, I said bar two. I meant to say bar one. But bar one being the pullback. So this is the breakout. Bar one is the pullback, and then we get that second leg up. Leg one, pullback. Leg two, pullback. Leg three, and we start to go more sideways. Oh, that's a bull body. When I was zoomed out, it looked like a bear body. So that's still a pullback, but it's a trading range bar, so we know there's 2-sided trading within it. Bar two, bull bar. Bar three, bull bar, closing above bar one's high. Bulls want to get a measured move of the breakout, and they do. 1-to-1's met pretty quickly. There's some fractal legs going on here. Leg one, pullback, leg two, pullback, leg three. Bar five is a pause bar, and they're selling up here, so there is a leg. That's why I called it a pullback. But it still closed bullish and kept going. Bar 6, 7, and 8. Bears that short down here are now trapped, and they have to get out. They want to get out of break even at least. They short more on bar 9. Market rally. They short a little bit more, and then look, comes right around to the 50% mark. bears that shorted the bar one low, thinking it's gonna reverse down from a leg one pullback with two perspective for the bears. Get out break even with 26 and 27, and then that rally. So there's a nice trade. I almost started trading again today, but just don't want to break it's not even passing the funded account's not the problem. Getting the account past the payout threshold is not the problem. It's the consistency rule that is destroying me, because I end up making too much on one day, and then like almost 2 months ago, if you guys remember, I had a 50K account and the target was 3,000, and I broke the consistency rule so bad I traded it all the way up to like 5,000, and my new target was like 6,500, and I took a huge hit. And then I went on tilt trying to size up and trade it back up to around 6,000, and I ended up blowing that account out. So I'm really focused on trying not to break that consistency rule. And once I can get past, I think once I do it a couple times, I add some more accounts, it'll be okay. One thing, if I'm speaking in the best case scenario, I get the payout, I add an account. I don't know if I'm going to use a trade copy right away. What I'd rather do is trade one account, get it to maybe $200 profits, and then trade the next account so I can keep trading and not skip out on days, because that consistency rule is killing me. Anyways, so this was a nice leg down. I thought about like, would I have taken this trade here? I don't know if I would, but there was trap bears here. They trap more because they shorted right here. That's why there's a tail. Short more on bar 8, exit on the 50% mark, and then look, the second leg is met with 10, 11, 12, and 13. 15 through 16 shot to get second leg down. Bulls that buy the high of 16 are not trapped. They're going to buy more when they can, maybe right around here. They buy more, and look what happens at the 50% mark of this bear leg down. Leg 1, pull back, leg 2, and that's met. This is not a trade I would take because of the gap up above the higher time frame EMA, but you can see that the counter leg 1, pull back, leg 2 trade did work. 25, 26, 27, it has a gap, and I would say this is shot to get a second leg down, but it's a leg 1, pull back, leg 2, pull back, leg 3. And it does break through support, but generally, Al Brooks likes to say, first gap bar after a good, I can't remember what he says. I think it's 20 bars or a good trend, or anyways, the first gap bar after a strong move in one direction is generally a better fade. So if you were to buy this bar, you would make 1-to-1 before you lost your money. So this last leg was a better fade, and you can see that it sold off, buy anywhere here, and you make your 1-to-1 before bears do. And that rally, and this leg was a leg 1, deep pullback, leg 2 for that. And then this leg here, bears that short here, hoping to get a full-on reversal, end up getting trapped. They have to short more up here. Again, that gives us a trade. Oh, on NASDAQ, it hit. Okay, it does on here. Now, I don't know. Depends how you place your limit orders. I do one tick above, so I would have got filled up on that trade. Oh, we would have got filled on NASDAQ. Even when I don't trade, I still place, I still pretend to take the trades. So yeah, look, NASDAQ, you get filled and it rallies. But I put limit orders one tick above, so I may have got filled, I may not have. The reason I put limit orders one tick above, let's say, so it's a limit order. Imagine there's a limit order right here. All right, let's just do this whole thing so you guys understand. If you trade with limit orders, this is an important thing to know. So let's say this red line is your limit order and you place it right on the 50% mark. If your math is right, so you should short here, this is the average breakout price, break even price, excuse me. This has to the bar that fills you has to go one tick beyond the 50% mark, you see, to get filled. So if it touches the 50% mark and it doesn't go one tick beyond, you won't get filled. So I always put it one tick above, so expecting it to go to the 50% mark. Does that make, so then I can get filled. And that's also why I put my orders one tick below here. That gives me a negative RR because I'm losing a tick here, I'm losing a tick here, and when I do my stop, I put it one tick below, so like right around here. I try to hit out, and I try and hit out before it hits my stop. But yeah, I do that because I trade limit orders, and that's just, if anyone knows a better way around it, let me know. On trading on NinjaTrader and some other platforms, they do fill if market touch. I can't remember the exact verbiage they use, and that is one way around it. So it says fill if market touch means as soon as the orders touch, it fills. It's kind of like limit order, but as soon as it's touched, you get filled. Sometimes you get filled at a worse price. TradingView doesn't have that option, so that's why I have to do it one tick above. Anyways, so maybe you get filled, maybe you don't. Another rally here. This rally is kind of climactic, and I would definitely say that I would look for a second piece of it because we have bullish price action. How would I trade it? Bears are getting short right around 45, 46. So let's see. There's something I've been trying to practice. So this bear spike starts here, but look, the bears that shorted here already got out break even on 48. So this would not be the correct place to pull from. Let's check bar 48 now. So I put the first order where bears get short, and then here, the first pullback. So this trade is still valid because look, they get short here, they try to short here, they're still trapped at break even. So they either hit out for a loss or they hold on to a losing position. 54, same situation. 55. Now we see that it got tagged, so this is the correct place to pull, and you would, I don't know if you'd make 1-to-1. I think you would on bar 71. And same situation. So if you had your order fill line, or if you had your limit order, your take profit order right on the line, you actually wouldn't get filled and turn around on you. The way I trade is like that, so I would actually get filled. That would be a winning trade. Let me know in the comments if you guys understand what I'm talking about by saying that 40, shoot, I think I said 45, I meant to say 46 is not the right place because the break-even traders here already got out here. They already got out on 48, so the break-even, the second leg dynamic's not present there. However, the second leg dynamic does stay present with bar 48 all the way up until we actually get filled in bar 60. If you guys want to know more about how I do trade breakdowns, check out the membership section. I go over my live trades. You guys see the profits and losses and all that good stuff. I talk a lot about trap traders, and that's what the plan I take. I plan on that's the direction I want to take everything. It's just where traders are getting trapped. And I talked about the market cycle in a different lens yesterday about boxes, how each phase is kind of becoming a box to me, and each box has the same objective is to trade a second leg, but the way we get to that objective is a little different. So check out that video yesterday if you want to know what I'm talking about. I'll probably go over it again in a later video. I have work tonight. I've been trying to get onto night shifts, and I got a night shift tonight, so I'm gonna do this, take a small nap, and then if I can get onto night shift, man, now we're talking. Now I can trade all day and work all night, and then I just won't sleep. Anyways, so this trade worked out nicely. Bar 72, I usually call it quits here, depending on how I'm feeling. I hope I would call it quits here today, but this bear leg looks strong to get second leg down. Problem is, sells right off into support and bulls end up rallying, and now this leg looks like it's a strong second leg up, and it actually makes a new high. So anyways, guys, hope you had a good one. Hope you had a good session. Let me know how you do. Talk to me in the Discord. I'm trying to do this automation thing, but it's becoming very cumbersome, so I'm going to keep going through it, but I am working on a separate indicator for swinging options, and if I can get that going, it's semi-automatic. It'll be about, it's very similar to what I'm doing, but it's a little different. It'll be an options thing, so I'm going to reassess my objectives this weekend because my ultimate objective is to start trade with me in September. So I got 2 weeks to go, and what my goal is to figure out either an automated system or a semi-automated system, which would be buying options contracts and let it swing for about a week or two before trade with me starts, so I can give my full attention there, knowing my money's working for me in the background, knowing I'm still scalping the futures market when I can here and there. So yeah, let me know what you guys are up to. I'd love to, a few of you talk to me in the Discord. I appreciate that. Let me know in the Discord. Let me know in the comments how you guys are doing. And I'll talk to you guys tomorrow. I'll be dropping a membership video. Sunday I'll be dropping the membership video. And then I'll see you guys on Monday. So you guys have a good one. Thank you for your time. If you learned something, share a show. Don't be a hoe. I'll talk to you later. Bye.